Okay, so you've got a pile of cash. Perhaps you're ready to retire. You've hit that golden age where you feel like you can live off of your cash flow. Or maybe you've just been a very diligent saver and you're ready to put that money to work with dividends and cash flow. The big question becomes, with that lump sum of cash, what does a dividend portfolio in retirement look like? What's up, you guys? Welcome back to the Average Joe Investor channel. I can barely contain my excitement. I love talking about dividend stocks here. So I got a comment on a recent video recommending that I do a video about retirement portfolios. And this is just the tip of the iceberg, guys. I'm really gonna need your help at the end of the video because I'm gonna ask for a lot of suggestions for some additions to the portfolio to show you how I can model things for the future. So make sure you stay all the way to the end so you can contribute to those recommendations. What we're gonna do in this video is take a look at my portfolio and a lump sum of cash. And I also am going to allow for different weightings of my specific holdings. And I also added in Schwab's US Dividend Equity ETF, even though it's not part of currently of my portfolio. And I'm gonna show you guys with my own portfolio and a few other options exactly what you can expect to earn in dividend income and what your portfolio would look like once we stop reinvesting dividends and we start taking them all out as cash. Super duper excited, guys. I can barely contain my excitement, so make sure you hit that like button, hit the subscribe button, and let's get started. Hey guys, Joe here. If you are new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. Make sure to leave a comment below saying you subscribed, and I promise to personally respond to your comment. All right, guys, let's get into the video here. I'm excited to talk about retirement portfolios. The majority of the videos that I make are all about reinvesting dividends and the power of compounding dividends, but at some point along the way, we're gonna start living off of our dividends. And some of you are there right now, and hopefully this is gonna bring massive value to you guys. So right now in this video, we're looking at my Average Joe dividend portfolio here. And I've got 20 different positions here. Let me just really quick review them for you. I've got Eris Capital, Westlake Chemical, Manulife Financial, Star Group Unit, AbbVie, Unum Group, Realty Income Corporation, Store Capital, The First of Long Island Corporation, Gilead Sciences, Walgreen Boots Alliance, MSC Industrial, UGI Corporation, Regions Financial, Genuine Parts, Broadcom, PepsiCo, Johnson & Johnson, McDonald's, and the Global X NASDAQ 100 covered call. You can see in there that there's a Schwab dividend ETF. It's not actually in my portfolio. It's actually in there for just for illustration purposes and to show you how it can potentially change the makeup of your portfolio. So here's what we've got going on here. We've got all the positions here. We've got the current shares owned in my own portfolio, current value, current yield, all that good stuff. But also I've got the current weighting in my portfolio for each of these positions. And I've also got a modified weighting, which is gonna allow me to show you how you can toggle between different positions in these different holdings to see how it would change the overall dividend income based on that lump sum, as well as what the overall portfolio would look like at the beginning and after 10 years. Again, not reinvesting dividends. And then over here, you can see the results columns here. We've got shares owned at the start, annual dividends at the start of the period, and the holding value at the period, which is gonna be based on that lump sum value. And then we've also got over here, after 10 years, not reinvesting dividends, how many shares would you own, what the annual dividends would be after those 10 years, and the holding value after 10 years. All right, so let's come on down here. Let's take a look at our entries. First thing we'll look at here is a starting lump sum value of $1 million here. And then what we'll do is we'll dial back. We'll look at 250,000, we'll look at 500,000, we'll look at $2 million, just because everyone starts with a different amount here. Maybe you're only starting with $100,000. I'll show you that. And as a quick reminder, if you're part of the Patreon community, you get access to this spreadsheet. You can toggle with the numbers yourself. You can change the weightings, change the lump sum value. I'll make sure you have access to that right now, today. If you want to jump right over to the Patreon community, you can get access to it. All right, let's come up here. Let's go ahead and start by revealing all these numbers here. At the start, assuming a $1 million lump sum, you're ready to transition your assets into dividend paying stocks. So, and we're just going to try to model my portfolio. I'm not saying you have to do that. I'm not the be all end all of dividend portfolios. I know that there are much smarter people out there than me when it comes to dividends. All right, at the outset here, we've got, based on my weightings here, we try to model it as much as possible based on the current weightings of all these different holdings, ranging anywhere from down to, I think, starting with just under 1% for the NASDAQ covered call, all the way up to, 2.5%, 3.5%, 4%, all the way up to, I believe, 8% here is the top holding with Realty Income Corporation. We can see here all the different amount of shares owned at the start. If we're purchasing the dividend stocks right now, which by the way, it's always a great time to buy dividend stocks, but with respect to the yield you're purchasing, it's a little bit low right now compared to what you might normally have with the big run up with the bull market. But you can see here how many shares you would own, what your annual dividends would be at the outset for all these different holdings here, and then what your holding value would be. As it should be, you scroll down here, When I look here, the actual value at the beginning should be $1 million. Hopefully I did that right. Yeah, $1 million here based on our starting lump sum value. If we had a $1 million portfolio, okay, and we purchased all of my holdings right now, what amount of dividends would we expect to earn in that very first year? And could we live on that? That's the dream, right? Not everybody is starting with enough time to build up to this, but that's the dream, right? For those of us that are younger, is to be able to build up a portfolio that we can then live off of dividends alone and not have to touch the capital. Based on my numbers here and modeling this out here, our annual dividend the very first year would be $47,977.13. Again, this is based on my current weightings here. Again, we talk on this channel a lot about reinvesting dividends, but what would happen if we just didn't reinvest at all? We lived off the cash, but knowing that dividend stocks raise their dividend, which is the amazing part here. When dividend stocks raise their dividend, we automatically get more income every single year, even without doing anything. We're not adding more shares. We're not adding more money into the portfolio. We're just living off the income, and we're increasing the income every year. All right, after 10 years, doing nothing else except for living off of our dividends would now be $2.29 million. This is exciting news. We're not reinvesting dividends. We're just increasing, by the way, doubling our portfolio size and having fun and living life while doing it. And after 10 years, what would our annual dividends be? Not $47,000, $93,000. $93,695.52. You doubled your dividends in 10 years. You didn't reinvest anything, you didn't add more money to the portfolio, you just lived life and you doubled your income. And over here you can see the breakdown for the shares owned, which should all be the same, by the way. We're not adding more shares. Annual dividends here, you can see the increase from 6,000 to 7,000, 5,000 to 14,000, 4,000 to 7,000. Different holdings have different dividend growth rates, and that's where the magic is. You gotta pick holdings that have a dividend growth rate that probably exceeds inflation. I would want to at least see that, although you maybe can focus on yield more once you're in retirement if you need to. Again, this is a pretty balanced approach here. Let's say we wanted to make some adjustments here. Let's say we only had $250,000 to invest. We can see here that annual dividends would be at the outset $11,994 from the outset, right? And after 10 years, we would increase our portfolio value from $250,000 to $573,000, and our dividend income, like I said, would double from $12,000 to just under $24,000 here. A lot of people have $250,000 when it's time to retire. So that's a very conservative and reasonable number here. And when we factor in things like Social Security and other income sources, maybe a pension from somewhere else, then $11,000, $22,000, $23,000 is very reasonable for dividend income. But let's say you've got more than this, because you know, a lot of people do once they're in their 50s or 60s here. Let's say we have $500,000. Now we're talking about, at the outset, after the initial 10-year period, we're talking about $24,000 in dividends, and we would pop that up to $47,000 after 10 years. We've gone from $500,000 to $1.14 million. And at some point along the way, maybe you make the decision to start living off of your principal as well. It all depends on your unique situation, your own unique profile. Not everybody's situation is the same. Some have intricate estate planning, things that they want to accomplish. Maybe they got kids, grandkids that they want to pass on their money to. Maybe they have a charity they'd like to pass all their money on to when they die and they don't want to touch the principal. What we could also do, and let me know if this would be valuable to you, is we could model what it would look like to live off of your dividends as well as a portion of your principal over time and see how that works out. You can see if you had saved up $1.5 million, you would start with $72,000 in dividends and you'd have $140,000 after 10 years. Portfolio would jump from 1.5 to $3.44 million. Let's go back to our original portfolio of $1 million here. Let's make some adjustments here. Let's incorporate Schwab's US Equity Dividend ETF. Let's say we want to put in 50% of the portfolio with Schwab and then another 10% for yield in that NASDAQ 100 covered call ETF. And then the other remaining 40%, we're splitting out pretty equally across the other 19 positions here, around 2% each. And then I had at the top here 3% for Westlake Chemical and 3% for Eris Capital. Based on that information, we come down here, we can see that the portfolio would yield less, $44,000 and that $1 million lump sum. And then after 10 years, we'd be up to $2.4 million and $86,772. So essentially you get pretty much the exact same thing, and you maybe could make the case for more diversification. So there's certainly a way to do that as well. We can make one more modification here. Let's say we'll go 75% into Schwab and we'll go 25% into the NASDAQ covered call here. If we went 75% Schwab, 25% Global X NASDAQ covered call, we'd have annual dividends of $50,615, give or take, based on our modeling here, and we'd have the portfolio lump sum value of $1 million And then after 10 years, we'd have $84,000 and 2.26 million here. We don't see much growth here because the NASDAQ covered call does not have much capital appreciation here, but you get more yield at the outset, $50,000. As you can see here in the spreadsheet, I've got all these tabs here. So if you're part of the Patreon community, you can jump over here and look at all the underlying data here, but I've got all the different holdings: Eris Capital, Westlake Chemical, Manulife, Star Group, AbbVie, and then all the way down here to the end, we've got McDonald's, QYLD, that covered call index, and we've also got down here the Schwab ETF and all the lump sum investments here, so you can see exactly how I came to the numbers that I came to. All right, guys, this is where I need your help. I know that you guys have other opportunities, other investment options you would want to see built into this retirement planning portfolio here. So make sure to leave your 2 cents in the comments below. What other different ETFs or holdings would you like to see as options here, so I can show those for you and then make those options available to the Patreon community. Make sure to leave your 2 cents here. If it's in there and it's popular, I'm gonna include it. I'll take the time to do it because I value you as members of the community, and I love to deliver for you massive value every time I make a video. That's all I got for you guys. Hopefully you have a great rest of your day. Happy investing for the rest of this week and this month. And please continue to stay healthy, both physically and financially. Have a good one.